Hola guys, ¿qué paso? What's going on? This is Hala Pablo, and I am not a financial advisor. So with that out of the way, I want to talk a little bit about what I'm seeing with Bitcoin. Real briefly, if you're not familiar with the wedge patterns in trading, and this isn't just native to crypto, of course. The patterns are relevant on all markets, all kinds of, whether you're trading stocks, commodities, futures, and crypto. You see them on all fractals, all time frames, rising and falling wedges, which are very similar to the bear and bull flags. The only difference is they're basically triangular patterns, which means that there's a series of higher lows and lower highs, but where the flag patterns are more parallel as far as price action trending in a narrow range pattern, the wedges and the falling and rising wedges are actually crooked tops and bottoms. They turn out to be more often than not. So that's why rising wedges, especially those coming out of a bear trend like we see here, and then continuing up with narrowing price action, higher lows, lower highs, cycles decreasing, or rather the wave cycles, the Elliott wave cycles, the zigzags decreasing within and coming to a taper. These are more often than not denote a crooked top. So this is basically like a triple top. If this plays out the way I think it will, this is basically just a glorified triple top on an incline. And so that's a rising wedge for you. The way you can tell what denotes distribution and accumulation in these patterns is, again, you want to look at the volume in relation to the price action. So in the case of a rising wedge, continuation pattern, you want to look at the supply and demand in relation to the advancements and the pullbacks. So we see here, let's see if I can blow this up a little bit. And move this back over here, say, so you can look at this here. So we see that although there is predominance of demand in this present range, we see demand clearly has predominance as far as volume goes. We see overall, supply increasing on the pullbacks. See, here's an increase here, here's an increase here, here's an increase here, and then we see demand decreasing on the upthrusts, on the motive waves. There's motive waves and there's corrective waves. On the corrective waves, the supply is increasing, and on the motive waves, demand is decreasing. And even though we see clear predominance of demand, we see that at each time the price action approaches the upper micro resistance, we see a failure to rally and a squeezing or a compression of the wave itself. The waves are getting smaller and smaller, and in each wave, in each pullback of the wave, we're seeing the same supply increasing. If this had a cumulative bias, of course, accumulation means that the market makers are accumulating the stock or the crypto with the intention to, at the end of the range, mark up the price and sell into the pump so that they can capitalize on their investments down here where they've been accumulating. Then we would see an increase of demand coming in. But we're not seeing this at all. We're seeing a failure to rally, and we're seeing increase of supply. So basically, they are accumulating more and more on the pullbacks, which leads me to believe that this has a distributional bias rather than an accumulative bias. And we see the great similarities. We see the tapering of the highs and the lows, and here with the falling and rising wedge, of course, falling wedges are bullish and rising wedges are bearish. We see this coming out of a downtrend like we have here, and then the waves slowly decreasing in scope, as we see here, the higher highs, basically, and the lower lows. At some point, we will get to the apex of this pattern here, and the idea is that Bitcoin will not dump. I don't like to use the word dump. Will retrace rather. And where will it retrace? I believe it'll retrace. I believe we're going to see a retesting of the 17.5. We can get an idea of how far back it's going to go. If we just do a quick Fibonacci retracement, we'll measure the highs and the lows here. And you know what? Let me get rid of all this first, like that. And then we'll measure the high and the low to get an idea of how far down we can go. So there's a retracement ladder here. The 618 would take it down to the 13,000. The 1 Fibonacci will take it back down to the low, which is the 17.5, of course. So if we make it back down to the 17.5, that of course is trading range support. We'll do a horizontal ray here. And so that's the 1 Fibonacci, and anything beneath that is a retracement. The 1.272 will take us down to 15.6, and then the 618, which is the golden retracement level, would take us down to a 13.1. I'm not saying we're going to go all the way down to $13,000 Bitcoin, although it is possible. Anything is possible. The 2 Fibonacci retracement would take it down to 10,000. There's a lot of analysts that are talking about $10,000 Bitcoin. And why? Because $10,000 Bitcoin would close out this macro liquidity void here and bring us back to, here, let me put it on the daily so it can show up better. Would take us back to this major area here where past cycles, this has been basically the money line for past cycles. The cycles back in 2020, this was the floor kind of area, or the the trend midpoint of this whole cycle here, lasting from let's see the date and range. So from, like, say here, 28th of June 2019 to where it began to mark up here, 10 October 2020. So over a year, we saw Bitcoin basically hovering around this midpoint area of 10,000. So that would bring it back down to the 2 in today's range. And the 2 Fibonacci, I mean, that's not unheard of. We can go down there and retest this. I don't think we dwell down here long. It might just be a wick flash, but then we will definitely go back up. Now, another reason why I think we're going to go back down, and at least retest the 17s is we need to have another leg down, because on every macro, if you look at the macro change of cycles from the bull to the bear and vice versa, we see double bottoms where it retests, and it has to be a double bottom. It shows up. It doesn't have to be, but more often than not, it's a double bottom, and it's discernible on the higher time frames, meaning on the daily and weekly. It needs to be discernible. So, say it doesn't retest at all, and it just shoots back up from here. That would be strange. That would be an anomaly. See here, it goes back down. We see the test here. We see the test here, where it retests the low. You see this macro void here where it retested here, this low, and then it retested here before we saw that pump. And it only makes sense that we would see a retest here and a retest here, close out this lower liquidity void and create that double bottom, or that Adam and Eve, at least. It doesn't have to go all the way back, but 17, maybe 18,000 would create an Adam and an Eve. Of course, the first shakeout area is sharp and steep, and oftentimes lower in the Adam and Eve than the second downward price action movement, which is more concave, which is more rounded, and usually doesn't go down as far as the first time. But there's something like that usually happens, and then from there we see either a more of a consolidation like we see here and we see here before maybe like a final dip. Then that would be a terminal shakeout, and then we would see the end of the bear cycle and the beginning of the bull reversal, the real bull reversal that happens on the macros. So remains to be seen, but right now it looks like the Bitcoin price action is forming a rising wedge, or at least a bear flag, and that these are textbook continuation patterns. Bitcoin has a propensity of bucking the trend oftentimes, so we're going to have to see what happens. But my prognosis is, by reading the signs, by reading the sky, I think there's going to be rain, and the rain is going to be bloody. So short term, at least short to midterm. So look for a retest around 17.5, and be very wary if Bitcoin suddenly begins to mark up. That could very well be, you could be stepping in, if you're tempted to buy in thinking it's going to moon, you could be buying into a bull trap, or in Wyckoff terms a UTAD, an upthrust after distribution, where the market makers have already determined that they're going to distribute, but before so, they do one last final upthrust to entice the herd to jump in and buy before they skin them alive and pull out the floor. Basically, they're selling into the pump. Once all the Bitcoin, once all their coins are sold, the strong hands come out, and there's only weak hands holding Bitcoin, and weak hands aren't enough to keep it up, and the retail guys and everyone just gets raped and they get trapped up there as Bitcoin plummets back down to retest the areas that we just talked about. So anyway, that's all I got. Again, not financial advice, but I'm watching, and you should be too if you're serious in your crypto investments. All right, guys, leave comments. Let me know what you think. Take care and be safe. Okay, adios. Bye-bye.